Okay. So who is going to do the reading for us? I'm waiting. Yes, okay. Let me nominate one of you. I think Prof. Amanda will do the reading for us today. So, Prof. Amanda, this is the question. Can you assist us with? Prof. Amanda, please, can you read for us? Your mic is muted, so unmute it.
The trial balance of Obina for the year ended 31st December 2016 was provided as follows. And then you are required to prepare for Obina the trading profit and loss account for the year ended 31st December 2016 and the balance sheet as at that date.
Okay. In fact, Prof. Amanda, that was a Rambo style of reading. You skipped the additional information, but anyway, I appreciate your Rambo reading. Okay. So yes, we have been given the trial balance of Obina from capital drawings and all the other items as you see them. Then we have this additional information. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. But you remember or you recall that we discussed 10. So let's try as much as possible to identify the adjustment that we discussed in the previous lessons, i.e. expenses prepaid, expenses accrued, income prepaid, income accrued, drawings by the owner, either by cash or at the bank or goods, interest on loan, provision for depreciation, provision for bad debt, and bad debt itself. So these are the additional information. Please help us identify the items in here. So the first one obviously is the closing stock. Now the second one, commission unpaid, is 1,800 naira. Dear professors, which of the 10 adjustments we discussed would you place this item under? Prof. Sandra, I'll call you on this one. Commission unpaid. What is it? Is it a bad debt? Is it a provision for depreciation? Is it an expense repaid? Is it an income prepaid or income owings? I want you to help us label this additional information.
Please, I think it's an expense, accrual expense.
Accrued expense. Prof. Sandra believes it's accrued expense. So that is to say the commission is an expense. Are you sure about that? Okay. Let me see if any of you has a different view. Prof. Alexia, do you share in the same thought as Prof. Dameki, or you have a different thought? Okay, I think Alexia's microphone. So let me pick on Asay. Prof. Asay, are you there? So Alexia, you can type in the chat if you can share your thoughts there. Prof, as a commission unpaid. So in this question, what do you think it is? Is it an expense prepaid or income prepaid or expense owing or expense prepaid, or maybe it's a bad debt or a provision for bad debt? Okay, Prof. Alexia shares.
So,
Yes, I say go ahead.
hello, please. So I know that commission is an income or revenue. So I'm thinking it maybe it's income prepaid. I'm guessing.
Okay, you are guessing it's income prepaid. Okay, so at least we have a different version. Prof. Amanda, would you settle the confusion for us? Okay, Alexia thinks it's accrued expense. That's what she shared in the chat. Yeah, Prof. Amanda.
Miss Alma,
Yes, Prof.
please, I think it's accrued expense.
Okay, she also believes
Please,
it's
accrued expense.
okay. Thank you. So I think we have 2-2. Oh no, 3 against 1. Okay. So I would have to be the judge of this situation. Now, commission unpaid. Unpaid. Now, you recall that I gave you some terms, okay, and unpaid was one of them, which is the same as when we say something has not been paid, then it is in arrears or it is accrued. So those who are using the accrued terms, it's fixed, or is due, or it's outstanding. Outstanding. Okay. Yeah. Or owings. The simple ones, or word you know is owings, as in the thing has not been paid, so it's being owed. But then the commission, is it an expense or an income? Dear professors, you can only determine that by coming to refer to your trial balance to locate that particular item commission. So when you go through this trial balance, you see commission here. Now, professors, this commission, as you see it here in this trial balance, is it an expense or an income? And I want to hear your thoughts on that. Is the commission an expense or an income? This one, whoever has the answer can unmute and tell us. Is a commission an income or an expense? And I think you would add an explanation to your choice. So, Prof, I say I'm coming back to you.
I think it's an income.
Okay, Prof. Dameki says it's an income. I think I say suggested it's an income, right? So yes, it's an income because the balance is at the credit
Yes.
side of the trial balance. Okay. So if it had been at the debit side, then that would have been an expense. So before you conclude that it's an expense or income, you have to check the trial balance first for it. So if commission is an income in this question, then what you see here is an income unpaid. An income unpaid is the same as income accrued. So all the professors who suggested expense accrued got the accrued right, but the expense, unfortunately, was not the right option. So it's an income accrued. Income accrued. Okay. So I believe now my professors appreciate how to identify these additional information. Great. Let's go to the second one, which is very simple, or the third one, provision for bad debt. So that is straightforward. The next one is telephone outstanding. So, profs, is this one to an expense prepaid or expense owing, or I want to hear your thoughts. I think Prof Asay would answer this for me for 5 points. Prof, I say I'm waiting patiently for you. Telephone outstanding. What is it in this question? I know you are not too sure, but just express your opinion, right? There's nothing like wrong answers on Omega. Every answer is accepted, and then we all discuss and get the right point. So unmute. Your microphone is muted, so unmute. Oh, I think she's having network. So Prof. Amanda, which one would you go for? Telephone outstanding. Is it an expense or income, prepaid or whatever?
Mr. Amma, please, I can't really hear you. Can you please repeat yourself?
Okay, I was asking about the fourth additional information, telephone outstanding. Which category would you put it? Is it an expense, prepaid, income, prepaid, expense owing, or expense prepaid? Do I have to take the question again? Did you hear me? Okay, Prof. Dameki, would you assist us? Prof. Dameki,
I think it's an accrued expense.
okay, so that is an expense accrued. Great, because the telephone in the trial balance is an expense. So an expense outstanding is the same as an expense accrued. That is true. Prof. Amanda, let me know if you can hear me clearly now. Okay, great. Now the third one, or the fifth one, I should say, is accrued salaries. And so we only have to check the salaries, and of course, it's an expense. So that's an accrued expense. Then we have rent was received in advance of 1,000 naira. Rent. So you see, ordinarily, when you hear rent, you know it's an expense. So you'll be tempted to say rent or expense prepaid, because receiving in advance means that, you know, it was prepaid to us, right? But we need to satisfy ourselves what is the rent in the question. And interestingly, this rent is an income. So it's more or less like a rent receivable. Okay, so the additional information here is speaking about an income that has been received in advance, and that's income prepaid, as we discussed in the adjustment. Okay. The next one, the owner withdrew 2,000 worth of goods for private use. So that is straightforward. The owner made drawings of goods. The next, the owner took from bank 9,000 naira for personal use. So again, another drawings, but this time from bank. Interest on loan is at 10% per annum. Bad debt is 200. Provision for depreciation on furniture is 10% on costs. And as we saw last time, on cost means the straight line method. And And finally, provision for depreciation on machinery is 5% reducing balance method. Okay. So now that you appreciate these, let's begin by preparing our trading profit and loss account as required. So the first point you have to get is to write the name of the business. So Obina. And we are to prepare the trading and profit and loss account for the year ended 31st December 2016, and underline it beautifully. Put your currencies there at the 3 columns. So let me copy currency. So we have one here, one there, one there. Okay, so our format is ready. So we can begin. As you all know, you begin with your sales figure. So you go to the question and pick your sales figure. And how much is our sales? Okay. So we have purchases and sales. Obviously, the purchase is the one at the debit and sales is the one at the credit. So 930,000. We check for return invoice in the question, returns. So yes, we have return invoice, which is at the debit, 15,000. So our sales figure is 930. We less the return invoice of 15,000, and the difference will be our net sales. So the first thing you can appreciate is that for the first 3 items, as in determining your net of sales, you don't really do a lot of adjustment there. Okay. Great. Then we'll move on to the cost of sales. So as you know, for the cost of sales, we begin with the opening stock. Let's check for our opening stock, which is 360,000. Then we add the purchases, but as you know, the purchases need to be adjusted with return outwards, carriage inwards, and as you know, if the owner took any goods for personal use, right? So let's satisfy ourselves. Purchases is 800,000. There is return outwards. We don't have carriage inwards, but the additional information makes us understand that the owner withdrew 2,000 goods. Okay. So 800,000 we less return outwards, and the return outwards is 18,000. Okay, there's no carriage inwards to add, but you remember, if the owner take goods, you withdraw it from purchases. So we less the goods withdrawn, 2,000. Oh, somebody is saying she cannot see the screen. Oh, please, can the others see the screen as well, apart from Asay? Professors, let me hear you. Can you see the screens? Okay, so I think I say you may have to check your, because the others can see.
Mr. Alma, please, can you scroll up a bit?
Okay.
Mr. Alma.
Yes. Which part do you want to see so that I take you to that part? So I should go up a bit to where, please?
Mr. Alma, please, this is where I couldn't see. That's why I was asking you to.
Oh, okay. Okay. So have you seen it now? Can we move on?
Yes, please.
Great. Okay, so the owner withdrew goods, and as we saw, you have to less it from purchases. So remember that key point anytime you are dealing with your adjustment. Okay. So let's punch the calculator to see how much we get for the net purchases. So that will be 80,000 minus return outwards minus the goods withdrawn. So dear professors, one of the adjustment we saw is the owner taking goods for personal use. Please, if you see that in your additional information, less it from purchases in your trading account. Don't forget that. Okay. We can now move on to get our cost of goods available for sale by adding the net purchases to the opening stock. So we have 1,140,000. We less our closing stock. Let's go pick the closing stock, and closing stock is 360,000. So we less that from it. Then that will get us to our cost of goods sold. Now, before we arrive at this cost of goods sold, we need to check if we have any trading expense. And I want to believe professors now appreciate trading expense. The first simple one you look out for is wages. So let's check this question. We don't have wages, neither do we have any trading expense stated in the question. If that is the case, then our cost of goods sold will become the cost of sales, taken under the net sales to determine the gross profit or gross loss. So in this case, our cost of goods sold, which is our cost of sales, is 780,000 compared to the net sales of 945,000. I think we would get a gross profit. So our gross profit is 165,000, and that is the trading account. So you appreciate that the unique adjustment or additional information mostly in the trading account is when the owner withdraws goods for private use. Okay, great. So we have our gross profit. We can now move on to the profit and loss account. And I think we'll do that in the next session. So Prof, kindly join the second session and we'll continue there. Any question before we move to the second session? Any question? Okay. So see you in the next session, professors.